Hey everybody, today we are going to talk about how do you select your 401k investments. So let's get into it. So when you're looking at your 401k investments, you're going to have two broad general choices. The first is to pick individual funds. And then the second is to pick something called a target date fund. So let's talk a little bit about each of those. The individual fund option is going to be much more work. And I got to say that up front, because you're going to have to select the right allocation for your entire portfolio. And what I mean by that is basically you have to have the right percentages in each category. So one example is you have to ask yourself, how much do you want in US companies versus international companies versus companies in emerging markets? Second thing you'd have to ask yourself is, how much do you want in large companies versus medium-sized companies versus small-sized companies? And then lastly, I'm not going to get into what this is, but you'd want to ask yourself, how much do I want to have in value companies versus growth companies? And it's really hard coming up with the right percentages for all of these if you're not, frankly, a financial professional. It's also going to be more work in rebalancing. And what I mean by rebalancing is that once you've picked the right allocations that I've mentioned above, you want to keep those allocations pretty consistent. So if you decided, for instance, to have 70% of your investments in US companies and 30% in international, you'd want to rebalance your portfolio so that those percentages match up probably about every year. So if they get off kilter, you'd want to get them back to that 70-30 ratio. And then the last thing to know about picking individual funds is that you have to select multiple individual funds. You don't want to put all of your eggs in one basket. You want to diversify your investments. So you don't want to have everything in just one individual fund. Now, target date funds are going to be much easier for you to implement and stay on top of. A target date fund is basically a fund that's going to invest money so that you can retire in a certain year. So there's target date funds for 2025 or 2030 or even 2050. This fund is meant to be all-encompassing so that you don't have to select other funds. You can just select that one fund and then be done with it. And it will get, let's see if I can move myself up here, perfect. It'll get more conservative the closer you get to your retirement date that you've selected. And when I say conservative, I mean more bonds and less stocks. So let's run into an example here. So let's say you pick, or let's say there's a 2015 target date retirement fund. So someone who wants to retire in 2015, a few years ago, they would have 38% of their investments in stocks, which are more aggressive, they're more volatile, but they have higher returns. And then they would have 62% of their investments in bonds, which are more conservative, they're more stable, but they have lower returns. Now compare that with a 2065 retirement date fund. This fund will have 90% in stocks and only 10% in bonds, because they can withstand the volatility and the aggressiveness of stocks since they have so many more years. They have decades to invest before retirement, and they can get higher returns. So let's talk about the returns that I mentioned as well as the volatility. So bear with me on this chart, but it's basically a chart that shows the annual returns of stocks and bonds from 1926 all the way up until the end of 2016. And as you can see up here, small stocks and large stocks, they each returned over 10% a year in terms of the investments. But they also took on a lot more volatility. So if you can follow my cursor to around, this is probably around 2008, 2009, look at how much stocks fell during that time period. They really went down 40 to 50%. Whereas if you look at bonds down here, bonds went down a little bit, but not a whole lot. So bonds, you're going to have less volatility. You're going to have less of those 40% drops, but look at the returns on bonds. Bonds barely got half of the returns that stocks did. So that's something to keep in mind. Stocks are generally going to have a better return, but they're going to have much more volatility. So that's something to keep in mind when you're making your investment choices. So let me talk about 3 more things. I'm having trouble with that today. Okay, so 3 more things to look at in your 401k investment options. The first is something called an expense ratio. All things being equal, the lower the expense ratio, the better. Expense ratio is basically paying the fund managers to operate that fund. You want to keep those costs down as low as you can, all things being equal. Second thing you'd want to look at is the number of holdings per fund. You want to own over 1,000 stocks and bonds. So you'd want your funds to combine for more than 1,000 different holdings because you want to be well diversified. And then the last thing you'd want to look at is whether your fund is active or passive. This gets a little detailed, so I'll try and make it simple, but basically active is a fund where you have portfolio managers, guys and gals who are picking individual stocks that they think are going to outperform. So it's a really active investment strategy. Or you can have a passive investment strategy where you basically buy a fund that mirrors an entire category. So let's say I buy, for instance, a fund that mirrors what the U.S. stock market does. And so I'm not actively trying to outperform the U.S. stock market. I'm just trying to get the same returns that the U.S. stock market gets. Over the long term, passive actually outperforms active because it's really, really hard to pick stocks that are going to outperform over the long term. And then this little graph is from CNBC, and you can see here active fund managers trail the S&P 500 for the 9th year in a row. And the S&P 500 just tracks the 500 largest companies in the U.S. So again, I prefer passive over active when it comes to investments. And let's take a look at a sample 401k investment option list. So I looked at a company's 401k options and I put it on this spreadsheet. And you can see up here the individual fund name, the expense ratio, the total number of holdings in each fund, and whether it's active or passive. And this is how I select 401ks for my clients and for myself. So we can see on the individual fund, I'm not going to read through all of these, but you can see, some of these have a higher expense ratio, 6.3, 4.9, 6.5. Wow, 1.41, that's really high. And then you can also see some of these funds, they only have 11 holdings, 73 holdings, 17 holdings. That's not a lot. And then you can also see on the right here, and so on the left is the individual funds that we've talked about before, and then on the right is the target date funds. And look at the expense ratio on these target date funds, 0.13. That's great. That is a wonderful expense ratio. You should be happy paying that. It's really not a lot of money. Then you should also be happy if you see that the holdings are over 19,000. That's a ton. And you should be really happy about owning a fund that has a low expense ratio as well as tens of thousands of holdings in it, because then you're going to be well diversified while not paying a whole lot of money. And then best thing of all, it is a passive investment strategy. So you're not having these managers who are trying to outperform, which is the exact way to go. So if I were working with someone and they presented this kind of retirement or 401k investment options to me, I'd probably steer clear of the individual funds, and I'd probably recommend that they'd be in a target date fund. Just on this individual example, it might vary depending on your company's plan, but this is just trying to help show you the things that I look at and the things that I think are important in terms of selecting a 401k options. And then I do have to give you a reminder, this is not a recommendation. It's just education. Since I'm not talking to you one-on-one, I can't give you a personalized recommendation. If you want a little more help in figuring out what to choose for your 401k, go talk to a fee-only certified financial planner. And then lastly, sign up for the free course that's going to be in the description below so that you can have a better relationship with money. Okay, I hope this is helpful. I'll see you next time. Bye.